Oh, it's time. It's time to get back to work tonight. Another day comes to an end. Hope you guys made some money out there. It's Tuesday night, though. We're getting ready for Wednesday's trading session. And I'll tell you, boy, the markets were wild today. We kind of anticipated that, but there are some really nice trades setting up for tomorrow. And you know me, right? You know how we do it in this video. I'm going to cover all my favorite trades in tonight's video to make sure you get a game plan to make some money on Wednesday. Got a lot we're going to cover. Very important video tonight before we jump in and get this party going tonight. Make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And if you guys enjoyed the video tonight, do me a favor. Will you hit that like button? Drop me a comment. Say hi in the comment section below. I appreciate you guys tuning in and supporting this YouTube channel. But enough of the intro, right? Wednesday is setting up to be a bunch of great trades. So where are the potential easy money, low risk, high reward trades, grow the account like a weed trades setting up here for tomorrow? As you can see, everything, at least the E-minis and the Nasdaq right now, there definitely is a little bit of that bullish tone to it, right? We saw some higher lows. We saw some higher highs today. We got a bunch of ranges, right? But you definitely can feel that the buyers are trying to gear up here for a retest, right, of those big highs that we talked about in last night's video, right? We expected to have some back and forth markets today if you watched last night's video, but it definitely feels like buyers are gearing up, right, to make that run. And so a lot of bear traps, right? Bear traps and bull breakouts on my radar here. Now, hold on, right? We got a bunch of resistance up overhead. There's some ranges down below. So, yeah, we're not out of the woods yet. Remember, this is still a long-term bear market. So the bears definitely have some chances for some reversals back down into that trading range. You know me, I'm going to make sure we cover both sides on the S&P and the Nasdaq tonight. I will not leave you hanging on that. Over on the oil, you can see that range right in the middle here right now. But I'll tell you though, support level. Talking about bear traps, right? Boy, there could be some really nice rips running higher here. Same thing on the oil that we have on the S&P and Nasdaq, right? Got a range. But we definitely have that kind of tilt to the upside right now. And again, just like on the E-mini, the Nasdaq, don't count these bears out yet because oil has that big juicy range down there. They would love to get some breakouts. Now I've got one breakout pattern that really is kind of the sweet spot on oil. So you're definitely going to want to tune in and watch the entire video for the oil analysis here for tomorrow. So as you can see, if you can hear my voice, I'm pretty excited for tomorrow's trading session. Now, speaking of tomorrow, let's just double check the news. There's not a lot of news on the schedule for tomorrow. We've got that weekly inventory report that will affect crude oil. But you have to think tomorrow could be a bunch of, ranges. I think ranges are expected for tomorrow because, of course, we got that CPI number coming on Thursday. So the oil report at 10:30 Eastern time, that will definitely be something we'll keep on our radar tomorrow in our trade room. But wouldn't be surprised me if we see some nice breakouts higher, back into the range, breakouts lower, back into the range as we kind of tuck and cover right ahead of that CPI number coming on Thursday. I love ranges, so I'll definitely be excited for that tomorrow in our trade room. So not a lot on the schedule for tomorrow. Markets are very much shifting their focus to that CPI number coming on Thursday. And obviously, right, we'll be keeping our eyes and ears open tomorrow for any unexpected news headlines. So we'll definitely have the news feed running tomorrow in our trade room, which opens up at 8 o'clock Eastern time. Let's get back to our charts, though, because that's where the money is made, right? That's where we make our money. So first of all, I'm going to cover all my favorite trades across oil, Nasdaq, right, S&P here tonight. So make sure you watch all the way to the end because you will learn something new throughout each step of this video tonight. And I do try to save the best stuff all the way to the end. So I'll give you a reason to stick around all the way to the finish. Why don't we grab the S&P first? We'll go S&P, Nasdaq, and we'll finish up on the black gold, the crude oil futures here right now. Now, first of all of these charts are tick charts. You can find those in the upper left-hand corner there. They're all tick charts. This is the 21 EMA. I talk a lot about how we use the 21 EMA in our free trading course on our website. And also be aware too, the S&P and the Nasdaq are really very similar. So whatever we talk about on one can be applied to the other, and vice versa. Now, there's a lot of stuff going on right now. There's a lot of key insights on these charts right now. We talked a lot about these in last night's video. But in a nutshell, if I can kind of summarize, what's going on right now, we have a trading range. Ranges act like magnets. You can definitely feel that kind of higher highs, higher lows. You can certainly feel and see that little bit of a bullish tint to it. And because we have that big run up, right, from last Friday and of course early part of Monday, we're really kind of trying to finish that unfinished business, if you will, right, up around those highs here, right? The S&P has that major high. It's basically last Friday's high. Yeah, no, sorry, it's Monday's high, right? Yesterday, just before noon, right? That high. They're trying to break out and retest that high here right now. So the buyers, right? The buyers want breakouts, right? They want to go back up to retest the high, and the sellers, right, they of course are trying to eat the buyer's lunch, right, and go right back down into that trading range, because in all reality, we really are still overall a bear market. We do have, though, that kind of a bullish punch that we saw from last week. So knowing that's kind of the key component, that's kind of in a nutshell what is the lens in which we are looking at these charts here right now. Let's talk about this, right? How do we make money on this? Well, first of all, we're going to cover both sides of this, right? Buyers would love to buy, right, some nice deep pullbacks, buy reversals off the low of that trading range. We're going to talk about those long setups, right? How to kind of time the entries on that. We'll talk about that obviously as we go deeper into the video here right now. But let's talk about going higher, right? Let's talk about going higher, because as we go higher, and this really kind of piggybacks on what we talked about in last night's video, as we go higher here, we know where the market wants to go, right? It wants to go back and retest Monday's high. And so we have to think, as we're going higher, we know where the market wants to go, but we have to be careful with what? With buying too high right now, right? That's going to be the key component as we go higher. So if we do continue running higher here right now, what you want to kind of think about is bear traps. Bear traps, and we talked about this last night. I'm kind of piggybacking on this last night. So imagine, right, if we do continue going higher here right now, what we want to try to do is focus on buying as low as we can, which means you want to think about kind of updating new channels off the high, bringing it down off that low, and be looking for, again, these are trap lows, right, or bear traps. Now, there's a couple different ways you can do this. If I can get a nice strong signal, right, off a prior swing low, right, I love to use traps because traps allow me to buy relatively low, right? So a bear trap would be a great way to buy it. Sometimes what happens, though, is sometimes they'll pull back a bit deeper. They'll run into, prior swings like this. We may not get that trap entry, and we could then look for what I call a failure into pullback combination. So if we don't get that nice strong reaction off a channel low for a bear trap, what I can do is I can trap in the bears by waiting for them to sell short off the 21 moving average. Think about where their stops are, and we can use their stops as fuel, right? When bears are caught getting stopped out, they have to buy their way out, right? We call these failure patterns, and then oftentimes we'll get that pullback right off that 21 EMA, right? So again, one would be that kind of bear trap right below a prior swing, again, combining it off the low of a channel will be ideal. Or we may pull back a bit sharper, right? Look for the bears to come in, undoubtedly trying to short back into that range below. The problem at this point, though, is it's just a little bit too bullish to be shorting this thing right now. And so with that bear seller failure, we light those stops up, we buy into stops, right? And then we grab that pullback. And again, I call these failure into pullback combos. I have a lot of examples of those, right, in our free trading course, right? Which reminds me, by the way, we're going to talk a lot about bear traps. We'll talk a lot about failures here tonight. I cover those in a lot more detail in my free trading course on the website. I know most of you guys watching tonight have taken the free course. I know you're making money with these because you guys are so great at sending me screenshots and this stuff. But if you're here for the first time tonight, if you haven't learned these specific entry tactics, real quick here, I'll put a link up here for you in the upper right-hand corner. Grab that link and take the free trading course, because the strategy that I teach in that free class will show you a simple trick to know where the winners will be each day, so you know where to get serious about taking your entries. And speaking of entries, I'll teach you 4 of my favorite entry patterns to help you start making money on your own account. If you're tired of missing the best trades right now, or you're taking too many losses, take that free course, grab that link. It's perfect for someone trying to make the jump into full-time trading, or if you're getting ready for retirement, right, trying to get that additional form of income coming in. That will give you a good roadmap to follow it. And most importantly, right, you'll learn all about things like this one, right? Let's say, for example, the market kind of jams higher here overnight. One of my favorite trades is a strong move, a shallow pullback, a higher high in price, and a trap. Now, again, the reason why you want these traps up here is because you don't want to buy very high, because we don't want to buy up into that high there, right? You can see an example right here, right? Strong move, shallow pullback, higher high in price. See how they come in and they buy those traps like that, right? This is the same pattern you want to see before we retest where? We retest up at that high at 39.73 and a quarter. Now, by now, maybe you're wondering, okay, Joe, so we know how to get in on the way higher. What do we do then, right? What do we do then? That's a very good question. There's a lot of ways we can trade this. Now, we have to remember, we're still kind of an overall bear bias. That big move up is kind of the objective. And then we have to think there's a good chance we're going to end up rolling back down, right, and go back into some of these ranges. Or we may hold and we may break out, keep going, right? And you get that 4,000 big round number. So kind of keep these patterns in mind. And obviously we'll be looking for this tomorrow morning in our trade room. If we end up all the way back at these highs right now, it's a great level to short because there's a lot of resistance overhead. But what's our problem? Momentum is our problem. So if I want to short this high right now, I have to absorb all of that momentum. We talked about this last night. If you ever want to call a top in a relatively bull market like that, you need a major turning point, right? You need signs of exhaustion, sorry, spelling on that, and you want to use some sort of catalyst, right? Again, sorry for the spelling on that. So we've got the major turning point, right? That's fine. We need to see signs of exhaustion. And signs of exhaustion are where we use the 2-try rule. Okay, in this example, there's a couple of variations of this, right? What I'll use in this situation, because of what just is a very strong move here, is a crown reversal, right? So signs of exhaustion. I want to see 1 try for the buyers. I want to go lower. Buyers want to come in and buy low, right? They don't want to buy high. So as we go lower, the buyers will try it again. If I can get that little bull trap on the way back up, that is a crown reversal, right? So again, major turning point. Signs of exhaustion, right? From the 2-try rule. And then what's the catalyst? What's the catalyst? The catalyst is all the stops, right? The catalyst is all the buyers who are foolishly buying too late, right? They got there too late. We want to be in this. We want to be taking our profit up here, right? Not buying up here. Now, I'll definitely talk about a breakout here in a second. Don't you worry, right? But this is not the place to be buying right into that high, right? Not in an overall bear market. Not quite there yet. Now, another variation of this. There's 2 more variations of this, and then we'll talk about the bull breakout going higher here. Let's say now we break out. And again, right, I'm talking about we go up, little trap entries, right? I talked about that earlier, right? So you're getting in the way up, okay? So now we find our way up, okay? A lot of momentum. Lot of momentum. The buyers come in, again, a lot of momentum. They pull back and they retest now. What do we always say? Mission accomplished. Anytime we see a strong move, we have to expect a pullback and a retest of the high. The buyers, of course, right, are buying. They're taking their profit at the high. Now let's rope in some of the rookies. Let's now trap in some of those rookies. Remember those 3 rules. Major turning point. Signs of exhaustion, right? 2-try rule, and then light those stops up, right? Remember, if you're a buyer and you're getting stopped out, you're a seller. In this situation, the sellers are selling and the buyers are selling. That's what gives you those pops running lower when you trap in those buyers, right, with a bull trap. Now, your job is not done yet, right? After we get that move up, that retest, those buyers try twice. Oh no, your job isn't done yet, right? Now the fun starts, to be honest with you. What happens now is now as we get that failure running lower now, we now can look for that chant, right, that run going lower. And now mark off that low, mark off that high. Repeat after me, find that trap and grab that first test is the best test. This is one of my favorite kind of sequences we look for in our trade room. Again, we run up, right? The buyers don't try once, twice, and fail back down. No, they pull back and they retest the high in this next example, right? Then the rookies come in, they wrap that rope around their neck, and we use their stops to ring their bell. Once the price runs lower now, momentum starts to turn, and now we can get a lot more aggressive. Now, again, we'll cover a lot more of the entry tactics on this in that free trading course, right? This could be a bull trap. It could be a buyer failure pattern, right? It could be a pullback combo, a strength move, right? Going lower here. And again, if you missed it earlier, I'll put that link in the upper right-hand corner. You can find all the important links down in the description of this YouTube video. All right? Are you with me so far on this? There's one more variation of this you'll want to be aware of. Let's say we go running higher, right? But now we don't get any of this, right? We don't get a crown reversal. We don't get a double top reversal. Nah, right? The mark comes in and it just gets punched right back down and begins to grind back down. These can be difficult. These can be frustrating because I can't just short the top. It's too bullish, right? And I really don't get a good signal for the short. But once we start to grind down, what do we then do? Yeah, we look for that new channel. We mark off that low. We mark off that high. And again, what I like to do is, at least my favorite is go looking left and find some of these prior swings, because swings are where traps live. Bull traps in this example. Get above the 21 moving average. Let the buyers come in and foolishly buy that pullback. That's a failure pattern into a pullback combination. And then where do you think the market wants to go at that point? Oh, easy at that point. It wants to go back down into that trading range, right? So those are 3 different variations of how we can get that short off the high. But the $1,000 question is, as we go higher, when can I buy it? We can buy it once we take out that high, once we hold the pullback, and what? Once we jump, right? Once we jump, we really have to jump right on through that high. There are really 2 ways to trade this breakout. One is to pop it up, get those buyers to come in, right? Hold that pullback and jump on through it. Next stop is 4,000. Once we have that proof the buyers want more. Again, I'm not going to buy that pullback. You're more than welcome to, but it's not a reliable trade, right? That's a 35-40% trade right there. I'd rather wait for the proof and take a 75-85% trade right here, right? And again, you're more than welcome to take that lower percentage trade, but the problem is if you it becomes an opportunity cost. If you put yourself in low percentage trades, what do? You don't just lose money, you lose confidence. And oftentimes, once you get burned on these too many times, you're not mentally in the position where you can really capitalize, right, on what is a much higher percentage trade. And this is a lot of things we talk about in our video classes, in our trade room. Is we don't let FOMO trade for us, right? Yeah, I want to buy the breakout too, but I want a higher winning percentage, right? I want a high winning percentage. I want to get that proof going through. The other option here, and again, we pretty much think the 4,000 number will be a good round number here. There are some more levels overhead, but it's a ways up. It's a ways up. So 4,000 seems to to be a very realistic big round number. Now, another possibility here is they pop up, they grind, right? And it starts to kind of flutter as it goes higher here. Usually those grinders like that, again, this could be kind of tricky because, again, we're not going to buy into it. But once we see it kind of rolling through it like that grind, that's when we start going out, drawing that trend line, finding that channel, and then probably what will happen at that point is we can use this resistance, right, as a support level, right? So go out, find swings because that's where traps live, right? Get below prior swings for bear traps, get below the moving average, trap in those bears for a seller failure, right? And then rip it, right? Running higher, trap, failure, pullback. But again, remember, the one key thing here is it has to confirm, right? Through that level. And then at that point, we're looking to buy that first test off the low of that channel. So again, we'll see what we get, right? As we go higher here, it definitely feels like these buyers are trying to make that run. Now, and again, remember, this will all apply to the NASDAQ. The NASDAQ, by the way, go back to the NASDAQ here real quickly. The NASDAQ, of course, right, has theirs is that 11,533, right? That's kind of the next big milestone. The S&P and the SPY, right? Well, the S&P at least has the 4,000. You've got, 11,533 there on the NASDAQ here. Now, speaking of NASDAQ, right? The next big question I have here on the S&P is what if we go lower? Right? So what's the game plan now if we go lower here, right? Because again, we have this, this tilt to it, right? So for example, right, can I sell it as we go lower? Can I buy it as we go lower? That's a really good topic to talk about because I have no crystal ball, right? I'm not here to waste your time with some prediction. I want to give you the tools you need to make money no matter what this market does here for tomorrow. In my eyes, it's a waste of time to make predictions, right? Nobody knows what the hell is going to happen tomorrow. Anyone who says they do is either naive, right, or they're lying to you. So we have to make sure we're ready for everything, right? That's at least my 2 cents. So all right, so we know the game plan going high on the NASDAQ, right? It's the same idea, right? In a nutshell, get the range below us as a magnet, but we still have that big run up, right, that we saw from last week, right? So identical strategy here on the NQ. Now, as we go lower, right, I can sell the buyer failure, and I can buy the bear trap. Like I mentioned before, I think bear traps are going to be very, very important here, at least until something changes here for tomorrow. Now, I mentioned earlier, right? We're looking for buyers want, right, off these lows. Buyers want this low. Buyers want that low, right? Now, the first question is that could I short this thing right now? Right? Could I short this right now? And the answer is you can, but we have to be very careful because we know where the market is probably trying to go. Again, I say probably because nobody really knows for sure. The reality is you can easily see these higher lows, these higher highs. And so if we're going to try to sell this market right now, we've really got to do what? We need some sort of edge over the buyers. And to get that edge, we need some bull traps. We need some failures. We need to run some stops to get that edge. Because right now the buyers have the edge. So if I want to be a seller, I got to trap them in and use their stops to eat their lunch, right, for tomorrow. So first of all, what I'm thinking right now is because we're just so obviously bullish right now, in the short term at least, I'd like to get these buyers coming in, try once, try twice, and really grab that crown reversal, right? And I call these crown reversals just because they kind of look like a crown, right? They're basically 1, 2 try failures, right? And again, that word failure, you'll learn a lot more about that in the free trading course, right? Which I mentioned earlier. And the reason why I want to trap on this is because you've got trend lines coming up here, right? You got trend lines down here, right? So whenever we talked about how going higher, right? When I go higher, I want to buy low, right? Why? Why do we buy with bear traps going higher, right? Because of overhead resistance, right? I don't want to buy high. I want to buy low. And a bear trap is the king or queen of buying low, right? Just that's the way it works. So if I want to sell high up here, right? If I'm selling high up here and I'm worried about selling too close to support, right? The best way to do it is a bull trap, right? So as we go lower here, once, twice, trap, back down, right? I really like that in my eyes is the only safe, reliable way to be a buyer here. Now, or sorry, to be a seller here, right? Going off the high. Now, that's pretty much the only option these bears have right now, shorting, unless we can get all the way back down and really rip this thing running lower, which is unfortunately a little bit too far out of the scope of this video. But not to worry, right? We'll be there tomorrow morning. We'll do this together tomorrow. We'll be ready for it if we get it. I think what is a very, very wise thing to keep in mind here is this bull channel, right? And you can see the trap setting up right here. You can see it right here, right? They go up, they pull back, they go up. You know there's probably a lot of buyers, right, who would love to buy that bear trap, right? And again, they've got unfinished business to go back up to retest the high. So what I'm thinking about right now is can I get that bear trap? Now remember, as you guys learn in the free trading course, bear traps require a very specific signal. All right, so we want to get too aggressive on this, but if I can get that bear trap off that low, right? Or if we don't get the bear trap, if we go a little bit lower here now, then what do? We talked about this earlier, kids. We talked about this earlier, right? We go up looking for a bear trap, but if it pulls back deeper, what do? We use a failure pattern, right, to trap in the sellers, right, as they get below the 21 moving average. That was the exact same, that was the thing we talked about on the S&P. This is the same idea here now. So as we go lower here, right, I want to trap in those bears. Now, I would recommend using what's called the 2-try failure here. Why? Because of the range. You know, ranges are magnets, and so as we go lower, it's just oftentimes what will happen is you'll get a good failure here. You know, you'll get those bears below the moving average. You'll get your failure, but oftentimes they'll come back and try to hit it again, right? Because again, that's a range down there. You know, ranges are magnets. We talk a lot about ranges, of course, in that free trading course. So I think the best way to do it here is wait for those bears to try a couple times, right? Twice. Then you've got all their stops right there. And then you can go out and look for that failure into that pullback combo, right? Or that failure into a rip higher, strong move, shallow pullback, higher high in price, right? Something like that. Like that'd be a great sequence there. And again, we're coming off of that. It's this channel, right? It's that channel right there, right? Rising support trend line. So again, much like we talked about before on the S&P, right? It's a shallow, again, with the right signal there. You'll learn about that in the free trading course, right? Or if we don't get the signal, we end up running lower. We run into rising support, right? We're holding off the top of that range. The bears are trying to short this thing, right? They want to short it. Bam, squeeze, rip them off, right? Rip their stops off, and then take that price going higher, and then grab that. Again, could be a bull pullback, right? Could be a little bear trap right below that low. And I'll tell you, if we can get something like that, I mean, that could be a 10x, 15x rip right back to these highs now, right? Trapping these bears and go. You know, kind of a little trap and go to finish off that unfinished business as we go higher here. All right. Now, of course, the next big question is, right? The next big question is what if the bears do get this thing, right? What if they do get that short off the high and we end up pendulum swinging, right? The amount above the range, the amount below the range, and we find ourselves all the way down at these lows. What do we do there? Well, you got to remember we're now at major support with a range above us. Okay, so if we go back to those lows now, great place to be a buyer. Why? Because we have a range above us and we're at a support level. But what's my problem? My problem is momentum. That's a hell of a lot of bears in the market right now. So this is where that same sequence that we talked about earlier, right? We talked about the pop-up, the crown reversal, the double top, right? Remember those? That's the same exact situation here. Just flip it, right? Flip it. So now, get rid of this. Right? Now, we end up crushing back down again, right? We find our way back down. Lot of momentum, right? Trapping the bears. Remember, if I want to be a buyer at support, with a lot of bear momentum, I need some sort of edge, right? The bears have all the momentum edge at this point, and the way to get the edge is to use their stops with signs of exhaustion. At least that's my favorite way to do it. That's the safest way to do it, right? Anybody can pick a bottom or a top, and maybe it's a 30% winner. I don't want a 30% winner, right? I want an 85% winner. That's the way you build a trading career, on confidence. That's the way you get consistency in your results. We don't trade FOMO, right? We trade good quality signals. Anyways, off my soapbox. Let the bears come in. Let them try once, right? Let them try twice. That's that crown reversal. Okay. Now, why do we need a crown reversal here? Why do we need to buy a trap right there? Because it's such a strong move down. If you try to buy it as it's going higher, what will likely happen is more bears are going to come in and try to eat your lunch, right? So that's why you've got to go in as low as you can, right? Really be careful buying it after 2 tries, right? Without getting some sort of trap. So, for example, we oftentimes we'll see stuff like this, right? Where there'll be a channel coming down, the bears will come in, and they get that trap low. And what happens is all the bears come in, they sell the top of that channel, right? Again, it's a strong move, okay? They're going to want to retest that level. When they come in and sell the top of that channel, they're already in. Now we get that nice strong trap signal. And if you're a bear right now, if you're a seller off that high, right, that is your nightmare, right? Now you're going, oh, shoot, I'm at support with a range above me, and I got this huge green candle just screaming at me. They're going to get the heck out, right? They're not going to hold on to that trade very long. And that's what causes those traps to rip and run back up into that trading range. These again require patience, not FOMO. Right? Patience, not FOMO. Now, again, the easier one here is when we get down to that low, the bears come in, they come in, they retest the low now, mission accomplished, right? Then the rookies come in. And they go, see, it's a lower low in price. We're bearish right now. They start getting short and right? Again, support, range above us. Not a great place to get short right here. But again, because we're so bearish, turning point, signs of exhaustion, and then what? Yeah, stops, right? Light those stops up and go back up into that trading range, right? That's the difference between a double bottom reversal, right, and a crown reversal. Crown reversals are before the retest. Double bottoms, well, because the name, right, they're double bottom retests. All right, so going to keep that in mind as we go there. All right, and then again, if we do go lower and they hold that pullback and blast running lower, that's a little too far to go here in this video, but that's okay. That's why I have a trade room. I can't teach you guys everything here in a 45-minute video, and I know it's already too long for a lot of you guys already. All right, so that's the game plan as we go. I've covered a lot of great stuff here on the NASDAQ, and we'll see what we get, right? No FOMO. Right? No FOMO, right? Trade good signals. Last but not least here, over on the oil. Now, don't forget, tomorrow's an inventory day, right? Wednesday, of course, 10:30 Eastern time is notoriously one of the more difficult days of the week here for oil. So keep that on your radar for tomorrow. And of course, there'll be a lot of the same stuff here right now on the oil. In a nutshell, and again, there's a lot of stuff going on right now in this market. In a nutshell, we have that really big rip, right, that we had from last week. So we know the buyers, right? The buyers are looking to get back up to retest. I get some levels up overhead around 77, 79, even for that range overhead. So buyers are looking to kind of finish that unfinished business. The same basic idea as the S&P and the NASDAQ. And of course, if we go lower, right? Range, support level below, right? So lots of ways to buy it back up. Now, I do think the oil, technically speaking, I believe the geopolitical fundamental mess that oil is right now. I'll leave that to a different video, but a little more bearish on oil than other markets right now. And to get that breakdown, we've got some major lows down there at 72.46. So a breakout pullback could definitely be something to look for right now. Now, the oil is in a position right now we just talked about, right, on the NASDAQ, right? We're at a key level of support, right? So what do we do in these areas, right? We look to trap in those bears, okay? Now, the biggest problem we have right now is location. We're right around that trading range. What's the best entry technique if I'm concerned with buying high, right? By definition, I'm buying pretty high right now, comparably speaking to that trading range. We need some sort of bear trap. Why? Because that's technically the lowest way I can buy, right? Makes sense, right? We go lower, 1, 2, bear trap. We go lower, we retest that low, 1, 2, try failure, back up in. We just talked about this, right, on the Nasdaq. Okay, so this is pretty much the same verbatim, right, as we just talked about the Nasdaq. Same game plan, right, on the crude oil. As we go higher, right? If we go higher here, I'm not a big fan of shorting this thing, right? If this thing rips higher right now it's quite obvious that this range is not the most important thing, right? Because if it doesn't finish off that rotation back to that low, right, that's a pretty good sign. This range is almost not even an issue anymore, and now we know where they're trying to go. So if they do rip this thing going higher, what was that pattern again? What was it again? Strong move, shallow pullback, higher high in price. Say it with me this time. Traps, baby, right? I told you bear traps are going to be a big part of this video tonight, right? I have a new drinking game, by the way, right? Every time I say the word trap, right? One more shot of tequila. Only the anejo, of course. Anyways, I'm kidding around with you. If you're watching this video right now, you might be having a margarita right along with me here, 35 minutes into the video, right? All kidding aside though, right? If we do make this run higher, it's that 2-try trap, right? We could also maybe think, if the market was to race higher here right now, knowing where it wants to go, right? Maybe it pops up and grinds and grinds. We find a new channel off that high, new channel off that low, right? Look left, find some prior swings, traps, failures, pullback combos, and again, we're trying to go up to that 76.80 area. I would try to leave a runner if you could, though, because I think that 77.48, 77.03, I think that's a likely kind of overshoot of that high if we do get it. All right, so that's definitely something I'm watching for as we go. And again, as we go lower, trap them in, right, double bottom, et cetera, et cetera. Now, one thing you want to be aware of as we break down, okay, is we've got this big kind of major low here. Whenever I have a trading range like this and I'm looking at a breakout going lower, what's the concern? I don't want to sell too low, right? I don't want to sell right into that low here. Now, right, get that big low back there. So this could easily fake out breakout, right? We rip lower, we V bottom, fake out breakout, back up into a right kind of pop and grind, and then right, bam, bear trap off that low. So be very much aware of the scenario down here. We've got to really get enough of a breakdown. And what I tend to do in these situations is try to use the underbelly of that previous range, right? So imagine now, right, it really rips lower. I'm not going to try to sell short down here because, again, we don't want to sell too low. We then wait for that pop up. And then because we have that strong move down, what do we always say? Anytime we see a strong move in one direction, we expect a retest, right, of that level. Anytime we see a strong move down, we expect a retest of that level. We're probably not going to see a lot of bears shorting very low, but if I can get this thing to bounce, that's why I put that note down there for a breakout pullback, I can now get those buyers trying to come in and let them just dig their own grave, jump right in, and we've got those shorts, right? We've got those stops, right, getting hit for that move down, right? One of my favorite techniques, right? Find those kind of channels, pop it up, right? Use the underbelly, as I say, right, of that trading range, and again, use one of those buyer failure patterns above the 21 EMA. If it was to really rip and run lower and then pop all the way back up, right, that triangle, those triangles are really common, right? If it really pops up like that, though, now we got to think now the buyers may have a little more juice behind them, right? So 1, 2, remember, anytime we really get a strong pop like that, you want to be careful, let them try twice, and then short back down. Right? As you can see, this could get a bit technical tomorrow, right? But again, this is why we have a trade room, right? I'm going over the basics here tonight. I think by this point now, you got a good game plan across all three of these markets, and hope you learned a lot in this video tonight. I know I cover a lot on these lessons, but tomorrow morning we'll simplify things down, right? I have a kind of a worksheet that I follow in our trade room, and so we'll simplify all this down, and we'll do it all together tomorrow morning at the opening bell. Again, don't forget, 10:30 is that big oil number tomorrow morning. All right, wrapping things up here. Thank you so much for watching all the way through, dealing with my bad jokes along the way here. Anyways, if you're watching right now, though, you are the person I do these videos for, right? In a world of, 2-minute attention spans, if you're watching this video 40 minutes in, well done, right? Well done. You are the dedicated trader that I really have kind of committed my teaching career to helping out, because it's one of the most satisfying parts of my job. Now, don't forget, guys, I would definitely recommend grab the free trading course, learn the free class, learn that strategy. That will give you a good roadmap to get you going. And I'll see you soon as a student, as a member in our trade room. If you got any questions, the easiest way to get help is to always call or email or use live chat on the website. Again, definitely drop me a comment in the comment section below. Give me a hell yeah in the comment section below. I'd love to hear from you. But the easiest way to kind of get immediate help, of course, is to hit me up in the office. I'll always be here to help out. All right, guys. Hope you learned a lot. Hope you use this information to crush the markets tomorrow. And I'll see you tomorrow morning, right? All the members, I'll see you guys tomorrow, 8 o'clock Eastern time. If not, we'll come back tomorrow night and we'll get ready for that drum roll, that CPI number coming on Thursday morning. All right, guys, as always, be well, be nice to each other, stay dry out there. The rain just stopped finally here in California. There's a pond starting to fill up in my backyard right now. But stay warm, stay dry out there. Hopefully the weather is better wherever you're listening right now. And I'll see you guys tomorrow. All right, guys, adios amigos. Bye-bye for now.